It's been a tough year, and if you're waiting for the market to crash to get into the market, the time for that has passed. It's now time to get into the market. Enough sitting on the sidelines, it's time to get in. It's time to take control of your financial future. Give yourself a gift this holiday season by investing in yourself. I know it can be stressful during the holidays where you're buying gifts for everyone else out there, for loved ones, friends, and family, but take some time and put some money aside for yourself as well. Ideally in the form of an investment in the stock market for yourself that you will be thankful for in the future. So while you're out there shopping for loved ones, remember to also invest in yourself. Set aside some of that money for yourself to invest into the stock market so that your future self will be thankful and you'll be better off and you'll have a better financial future. We've had a tough 2 years in the stock market. There's been lots of ups, there's been lots of downs. Inflation has gone through the roof, and we've had the fastest increase of interest rates in history. And times like that, it can be very scary to invest, but things are finally starting to look better. Inflation is coming under control, and the US economy has brushed off a recession. And yet I still hear so much fear-mongering out there. Even though the facts are saying things are getting better, there's still so much fear-mongering out there. Articles and YouTube videos telling you to sell all your stocks, that the crash is coming, that this is the last opportunity to get out of the stock market. But I feel like those are probably better to get clicks than actually help your financial future, especially with the information out there saying that you should sell. If you sell, that's probably the worst thing you can do. The thing you want to be doing is staying invested in the stock market for the long run. Not only are there articles about getting out of the stock market, there's also articles and videos about how this is the end of America, that America is doomed. But I love what Warren Buffett says: bet against the American economy and America at your own will.
But you just look at where we go milestone after milestone and never bet against America.
Yes, there's going to be ups and downs. It's not a straight path forward, but in the long run, the US economy has proven to be the strongest economy in the world. It is a leader in innovation. And don't forget that the US dollar is the world reserve currency as well, which has a huge impact on global economics. In fact, it's one of the main reasons that we call the United States home today. It's one of the strongest economies in the world and offers the most opportunities for individuals who are willing to take risks and play the game of capitalism. So if you're thinking about getting into the market, the best thing that you can do is dollar cost averaging, where you put your contributions on autopilot. So you take a percentage of your income every month or bi-weekly whenever you get paid, and you put a percentage of that into the stock market regardless of if it's up or down. And what gets you rich isn't outstanding returns, but it's how long you can stay in the stock market without having to sell. There's a quote by Charlie Munger that the one thing that you don't want to do is interrupt compounding when it's working. And take a look at Warren Buffett. Warren Buffett, if he retired at the age of 65, he'd be worth about $3 billion, which is still really great, but he wouldn't be one of the richest people in the world today. What got Warren Buffett rich is he stayed invested past the age of 65 until now. And so between the ages of 65 and 95, that's when he made 95% of his wealth. He went from being worth $3 billion to being worth $95 billion and becoming one of the richest individuals on the planet. So you've decided to start investing. That doesn't mean that the market's going to go straight up from here. In fact, the market will come down. Probably not a lot in the next little bit, but anything could happen. There could be years where the stock market goes down 30, 40%. But then there'll be other years where the market is up 30 or 40. But if you keep buying throughout, when the market is down, when the market is up, you'll be better off. Because eventually when the market does return, you've already got money invested in the stock market, so you'll be able to take advantage of all those gains. Another reason why I think now is the best time to be buying and why you want to be buying right now is I was talking to a mortgage broker earlier this week, and they were telling me how they have clients that are waiting for real estate prices to crash. But if you look at prices, they've already crashed. Like, look at this chart. You can see Seattle prices have come down 15% from its peak. Now that is a pretty significant correction. And if you look at this point here, you can see that the market is slowly starting to turn and is slowly coming back up. Now it is slow growth, but it is growth nonetheless. And I really don't anticipate prices to come down again or to go lower from here, especially next year where there's discussion that interest rates will come down. And if that does happen, it'll cause stock prices and real estate prices to go up even further. And another thing about when prices are at their bottom is you don't know that you're at the bottom of prices until time has passed and you're looking backwards. And that's because you have to look at the graph and you see, okay, Since this point, prices have only gone up, so you're at the bottom. You'll never actually know otherwise. And I really think that given that the bottom that we've seen a few months ago, that this is the beginning of a new bull market. There's a lot of positivity in the market, which will drive prices to continue to increase for years to come. Now, that doesn't mean prices are going to go straight up. There'll still be times, maybe weeks, months, when prices do come down. But in the long run, I think we're in for a very positive direction. But if you want to take advantage of that growth, if you want to see any of it and participate in it, you need to put your money into the stock market. If you don't, you're basically guaranteeing zero growth of your money. There's a saying that really guides me and helps me to stay invested, and it's that scared money doesn't make money. And the reason for that is that sitting on the sidelines is not going to make you money. It keeps you out of the game. It doesn't let you participate in capitalism and the growth of asset prices such as real estate and stocks. And unfortunately, part of the game of capitalism is you need to be willing to lose money, to risk money. That's how you make money in the long run. Now, that doesn't mean go to a casino and bet all your money on black, but it means if you want to make a couple $100,000, you're going to need to risk a few thousand. If you want to make $1 million, you're probably going to need to risk a couple $100,000. If you want to make multiple millions, you're probably risking many millions. And if you want to make billions, you're probably risking hundreds of millions. Right now, I wish I had millions of dollars to invest because it's one of the best opportunities. There's so many opportunities out there. There's not a lot of individuals who are willing to risk to make money, and so that's really great because you can start getting money out there so that when the market does explode again, you've already invested a lot of money already, and all of that is going to grow together. So get out there and start investing. This is going to set you up for long-term financial growth. And remember, while you're out there shopping, make sure you're not spending all your money and you've set aside a little bit of it so that you can invest as well into your financial future. I hope you enjoyed this video, and if you haven't yet liked or subscribed to the channel, please do so. I really appreciate it, and I will see you on the next one.